So, good morning, active traders, and welcome to our live Trading Week Ahead broadcast for today, Saturday, May the 21st, 2022. Good to see you all here. I hope that you're doing well in your trades. I'm up $4,000 the last 2 weeks alone, doing great. I may get back some Monday because I went short the market, $24,000 worth of inverses because I did not see the hammer in time. Get this chair up. We do have a bullish hammer here. So on second thought, I shouldn't have put a lot of shorts on, right? Anyway, market's been down for a very long time, almost a record-breaking run from 46.50 down to 3900 here. We'll see if it's able to bounce or if it continues on down. So let me start by asking you, how many of you are experimenting with either going short or buying puts or buying inverse ETFs, things that have to do with shorting the market? Have you been on the right side of the market the last 2 months or so? Or are you still trying to bottom fish and find dips and things that are still going down? How many of you are at least trying to do things like shorting or buying puts if you're an options trader, or are doing inverse instruments like I do all the time? Wow, okay, good to hear it. Hey, John, hey, and thanks, Winnie. Thanks, Mira. Hey, you too. A good question from a trader. Wendy wants to know, with the hammer, are we going to get a bounce? It's entirely possible. I went short the market on Friday because of the downdraft, but I neglected to check the daily candlestick. So that's a mistake that I made. So I hope I'm not going to pay for it on Monday. I'm 24,000, which isn't a lot for me, but it's a kind of moderate, medium amount. 24 grand short. I'm long things like TZA, UVXY, and other inverse instruments. Anyway, we may get a bounce on Monday. I still think we're due for a lot lower. What's a pattern that you notice in the bounces, the bear market rallies? We have 3 or 4 days. Remember, I told you guys, 3 days is the limit, 3 days. So if we get a bounce, it'll probably peter out by Wednesday. So if you want to bottom fish on Monday, have at it if the market bounces. But I'm going to be out of my trades, or at least tightening up trailing stops come Wednesday, because history repeats itself. As pattern day and swing traders, you need to observe patterns. What's the pattern of this? Right, take a look here. Pay careful note. Three-day bounce, 3-day bounce, 3-day bounce. Trying to draw that to cover up there too. Anyway, we're getting 3 days or so of bounces in the downtrend. The market's still downtrending. I'm not going to call it a break in trend until we take out the 4,100 level, right? Any market technician would agree. If we break the downtrend, meaning we get above the previous bounce, which would be over 4,100, then we'll be out of bear market territory, at least temporarily. But as long as the market's still taking out lower lows and lower highs, despite the occasional bounces, we still need to be short bias, because this market may well have a long ways to go down. I agree with one talking head who said yesterday that the market's not likely to bounce unless we get some kind of a slowdown in inflation. And with the current administration and everything that's going on, I don't see that happening anytime soon. So let's take a look at the VIX here. As long as we're looking at what matters. Now the VIX has had a tough time breaking over new highs over 35, 36, but it's still very bearish. The VIX anywhere over 21, 22, which it heavily is. It's still way up here, closing at 29.43, just around 30. A VIX that's over 21, 22 is still a bearish VIX to me, and it's still up in bear territory. So as long as the VIX is in this cloud, it stays within this region up here, we still have a negative short bias on the market. Now, if the VIX drops down under, say, 25, 24, then we'll see a bullish pressure coming back a bit. And if the VIX gets way back down to 20, then bulls will be in charge. But as long as this is one of the more valuable things I'm teaching you right now. Remember, I said this next week. Remember, I made over $4,000, which I know to some of you it's not a lot, but to me, it beats losing. So anyway, getting 4,000 in 2 weeks worth of my trades, I use this kind of thinking to help me develop a trading plan. So step by step, what to look for. So when the VIX is up here, I still want to maintain pressure on the market with my short positions. Wow, good to hear. Brian's telling me the Q's put option paid 500% Friday. Yeah, it could be. Anything's possible, right? And one of the challenges is, we've got so many opportunities to trade, but you have to know how to combine the signals of what to look for in real time, or if you're swing trading, at least day by day. You want to make it easy and simple and as clear as possible so that you know exactly what to look for, and so that you're able to put on trades that can hopefully make you some money as you develop entries and exits, trail stops, hard stops, position sizing, and scaling. So anyway, as long as the VIX stays over 26, I'm still bearish bias because that's the support. Well, 25, okay, 25, 26 is VIX support. So as long as the VIX stays over 25, I'm going to maintain a bearish profile in my trades. It's worked out great. Now let's jump to a day trading strategy that I've been using very effectively this last couple of weeks. Oh, by the way, the SQs, shooting star up there. I shouldn't have bought that. TZA, shooting star. I wish I had paid attention to the daily candles. I was in the heat of battle, so I neglected to do so. So that's my fault, entirely my fault if I lose money on Monday, if the market gaps up against me, because all indications are things that I'm long are going to drop and the market's going to bounce. The point is, look at how strong this uptrend, I'm just talking about this candle here, but look how strong the uptrend is in TZA. That's our Russell Small Cap Leveraged Bear. And you can see our NASDAQ inverse, the SQ is also really strong up here. So really good, strong directional uptrend in all things inverse. Now let's take a look at our intraday here. One of the most powerful strategies you can use as an active trader is, I was trading this one and UVXY, of course, heavily yesterday. And one of the things that you can do as an active trader is when you start to see something recover, if you're looking for bounces, the first place to look is the recovery of the previous day's low. So if something's if it gaps down under the previous day's low, and then it starts to pivot back up, a long signal is right above the previous day's low. So I started heavily trading this right over 16. And I got out near the 1740, I think it was. Anyway, we had a really good run to the upside here, and it had a good move up. Now, one strategy that I urge you to follow is to look for trading inversely correlated instruments, like UVXY versus SOXL is my favorite, what I call pair trading approach. Because you notice how they're opposite, right? Notice how SOXL started up and then it crashed and burned and then bounced into the end of the day along with the market. This one, it goes in sync with the market. Whereas our inverse is like UVXY started down and did the exact mirror image opposite. They started low and they went high. Now, one of the things that you'll learn in my live trading room is how to trade them simultaneously, or trade them. It's kind of like ping pong. When one goes up and then it starts to drop, we sell it, and then we go long the other instrument as it's starting to move up. And so you can hand switch off one to the other back and forth. So one goes up, you buy it on the way up, you sell it at the first sign of trouble, flip to the other one, and as it goes up, you trail a stop, and when it stops going up and drops down, you then go back to the original. It may sound a little tougher than it is. It's not simple, but it's smart, because what it does is it gives you kind of like, I won't say guaranteed, but pretty much guaranteed. For example, your SQs is going to trade opposite to your TQs, right? So as one goes up, the other goes down. Now, as an active trader, you can also use this strategy in swing trading. So if you're not in the heat of the battle and you don't want to do intraday trades, you can still use the same exact strategy in your swing trades. And for example, you take a look at the daily. This is our TQs, boom. As it goes down, the SQs does the exact opposite and goes up, right? So if you put on swing trades such that once you're in a position and it's in the money and it's starting to go up, and then it starts to go back down against you, you tighten up a trailing stop. And if that takes you out, so be it, that's fine. Book the profit. And don't just call it quits. You can then flip to its opposite instrument, the opposite, like SQs versus TQs. Or I use UVXY. You could trade UVXY versus SVXY, or I use SOXL because it's got better range. Does everyone understand that concept? I think it's a good one because it's worked very well for me, very profitably the last couple of weeks now. And it's one thing that you'll learn about as a member of the live room. And just a quick commercial announcement. If you have not yet ordered any of my webinars, I did put all these in the vault. So if you missed any of my premium webinars that I did the last couple of months, these are all new. They're all from January and more recent. So these are all recorded within the last 90 or 120 days. They're fresh and they're on popular topics like inverse ETFs that we just talked about, position sizing, how to trade gaps, an updated version, breakouts, and how to exit on time. And that's what I call my profit-taking bootcamp. You can get all 5 of those for $4.25, or you can order them separately. And one of the neat things that I thought I'd throw in is if you order any of the videos, you'll also get the access to the live room for the rest of this month. So give it some thought. It's only $97 for each one. They're all an hour and a half or longer each, and really good content and high definition video. So, and if you want information on the details of what's covered, you can click on this. That was the original webinar page from a few weeks ago. So I want you to take note of this website. It's my company, trademastery.com. trademastery.com/vaults, VAULTS, kind of like a bank vault. So we have it there. So a resource for your learning. The main reason I did this, a lot of people were saying I couldn't make the original one. Can I still get a recording? So I said, okay, let me go ahead and put them all in different recordings so you guys can get access to those. So I want you to each get at least 1 or 2 this weekend, okay? You'll be happy you did because you also get live room access from now till the end of the month. So that's a bonus. Okay, anyway, that's my only commercial pitch for today. Let's get back to business. Now, what are some of the instruments that are worth trading in our current market? If you're intraday trading, you can take a look at some of the charts, what we covered yesterday. Charts like that. Some of these pop and drop stocks, not my favorites. Disney did a big sell-off. I'm fond of Disney if it does take out new highs, but I'm not in it yet. I went to cash in virtually all equities. Many of these had an end of day bounce after the intraday drop. But what you don't want to do is try and bottom fish. Usually it's better to just intelligently trade good breakouts as they occur, right? And just use a previous resistance area as kind of a trigger point to get started with your trades. Now remember, I always advocate that we use a sequence of trades. So you don't just make a trade based on some squiggly line or horizontal support or resistance. Instead, break your trade, in half. Instead of 400 shares, do 2 200 share trades or 4 100 share trades. So that way the cost of being wrong on any individual stop loss should be minimal, and you get a chance to scale in or leg into the trade, either day or swing trading. Hey, Steve. Hey, Russ, let's see. Will I be having a $9.97 annual special soon? I just retired and now have time to follow your daily action. Yeah, sure, why not? If any of you, I made this offer to my live room members yesterday. I'll extend it to a really big turnout today for all of you. If you want to join my live room for just $9.97 for an entire year of live training, get in on the action. And you can just email me or send me a support ticket. I will hold that open through end of day Sunday. So anytime this weekend, if you want to join the live room, that works out to just $86 a month, which is a bargain because we meet Monday through Friday from 8:30 in the morning till 10:30 or 11, depending on how volatile the market is, and then also 3:30 to 4 every single day. So you get 5 days a week coverage for a whole year. That's every single trading day of the year. I'll be here for you, and we trade the open, and you can get that for just $9.97, which is, I think, $500 off the regular rate. So if you're interested, just drop me an email, ken@trademastery.com. My email is ken@trademastery.com, or click on the support ticket on the website of TradeMastery. All right, thanks. Let's see, no, Wendy, that's a no. Let's see, Steve, when I scale into the trade, do I do that on the same day? It's moving in the right direction or in subsequent days? So if I'm day trading, it has to be the same day. For position sizing and scaling, I understand your question. For swing trading, I usually space it at least every other day. That's a smart question. That's a smart answer, an important answer. Because if you get in too soon on a breakout, it may well fade, that same day or next. So what you want to do is have some open P&L unrealized gain in the position that acts as a safety buffer before you add to the position with the second trade. So for example, let's say you're looking at swing trading, something like I like to swing trade is, say, SQs. Say if you buy here, you don't scale in the same day, nor do you scale in the day after. You scale in the second or the third day or later. So wait till at least 2 days. So if you buy it on Monday, you can't scale in on Tuesday because that's usually too soon. And the thing is, when you put on the first trade, after you get into a second trade, you need to then move the trailing stop to break even. So if I buy it, say 36, and then I buy it 38, I have to trailing stop at 37. And that's probably too close. But if I buy at 36 and I buy at 40, then I can have it go all the way back down to 38 and still be in the money. So when you scale every alternate days or more, so Monday and Wednesday and Friday, or Monday, Thursday, and next Monday, that's fine. And make sure you have at least $2 or $3 worth of pin action of unrealized gains in your winning trade in your hip pocket before you scale. And that way it kind of subsidizes it if the second one, and frequently the second one will just be a stop out and pull back, at least you can get out of break even. So that's really important. Let's see another question from Steve. Do I sell half the position when I get to a certain profit target and let the rest ride? No, what I do when things are at near targets, for example, if I get in at 26, let's say I get in at 24 and I buy again at 26 and now it's up to near 30. My target is the decade would be 29.30. I will tighten up a trailing stop, but I don't arbitrarily sell. I just tighten up the trailing stop because frequently they'll keep on running up. And for all the times they do come back down, the trail stop locks in a profit. So that's good. Let's see, we don't have too much time left. I want to thank y'all for being here. I just wanted to mention the technique that's worked really well for me. It's made me most of my profit, a lot of my profit at least lately. It's been trading things like this or this as they alternate. So that's kind of an alternating strategy. When one goes up, you sell it at a pivot, right? For example, I was trading UVXY yesterday a lot, as usual. And when it got up here to here, I was tightening up the trailing stop, locking a gain. Now, and I bought here and sold here, that's not good. So one strategy or one tip that I'll share with you is midday pivots, like a V-shape reversal, right? Or an A-shape, an A-shape reversal like this chart, or a V-shape often occurs near lunch if it's going to occur. So do check in with your charts, whether you're day or swing trading, around lunchtime Eastern. And if you want to tighten a trailing stop to within a point, or if you're day trading within 30, 40 cents, but tighten a trailing stop up as you get close to 11, 12 o'clock, because often things will go back down. And that doesn't serve us well if we buy high and sell at the same price. You want to buy a breakout, let it go up higher, and then tighten the trailing stop and sell it as soon as it starts to go down, book the profit. And my strategy is I then flip, I flip to the other instrument. So I was long this on the way up, and then I was trading SOXL aggressively many times yesterday. It was exhausting. I did over 119, I think it was 119 round trips. I was trading that thing into the close. So what this does is it expands your horizon. It gives you more words to speak in your language as a trader. So instead of just buying things when they go up, and then once they stop, you're out and you're just sitting on your hands. Instead, with this particular strategy that I teach exclusively in my live trading room, we can do pair trading or flip to the other corresponding bull or bear ETF, right? Depending on which way it's going. So anyway, that's kind of the nuts and bolts of my strategy. Let me know if any quick questions. See, do I find with the volatility I get stopped out a lot? Yeah, frequently. But I made $4,000, $4,100 the last 2 weeks, despite all the many stops I got. My most profitable year, I think I was 72%. I calculated it was 72% of my trades were stopped out. Yet I made so much money because my wins were much bigger than the aggregate of all the stops. So I don't worry about the winning percentage. What I worry about is the net profit. All that matters is money. That's why I love my strategy, because it's like my colleague, the brilliant Tom Sosnoff says, trade small, trade often, from Tasty Trade. Highly recommend Sosnoff and his team at tastytrade.com. And be sure to watch his First Call Sunday broadcast on YouTube Sunday afternoon. It's also very informative because he goes over the SPOOs, the S&P futures, crypto. I think it's Sunday around 4 or 5 o'clock, something like that. There's a replay on YouTube and you can watch that. Anyway, my point is, I like to trade frequently and I take frequent stops, but I hammer away at the market till I make it work. And that's part of the persistence that it takes to be successful as an active trader. Unlike what a lot of the phony baloney educators out there who don't even really trade, I've got tax return proof. I did 41 million worth of trades in my Fidelity account last year alone. So I'm a very beyond hyperactive trader. I'm very aggressive. And I share my lessons learned in the live room. That's why I do all this, is in service of you folks, and to make my own winning trades too for my own account. So good stuff. 109, let's see. 119 round trip. So it's 119 entries. So it's a total of 238 trades. I'd have to log into my Fidelity account to check, but I frequently do. Between 80 and 100, 110 trades daily. That's probably overdoing it, so I'm trying to cut down. But I'm aggressive, and that's how I refuse to lose. Refuse to lose. Say that even rhymes. Refuse to lose. I'm still going to lose frequently, but I also win frequently too. But if you don't play you can't win if you're not in the game, right? So I like to advocate throwing a lot of darts. The ones that stop out, my average stop loss cost is under $50 by far. I may do like 300 shares with a 12-cent trail stop is a very common increment that I use, or 400 shares with the 6-cent trail, that's $24. 300 shares, 12 cents, that's $36. So my stop loss cost is down in the insignificant or not very significant category. Of course, it adds up if you're doing 100 trades a day, but of course, they're not all stops. So what you do is put on a lot of different trades that make sense on your terms in a way that makes sense for you personally, and use strategies like this. So you're alternating between things that are going up and down. Now, a question often comes up, well, why don't I just, if I think it's going to go down, why don't I just go short the same instrument? Well, it's not that easy. It never is. If it was just that easy, I would go long when I think it's going to go up and then short when I think it's going to go down. Frequently, though, let's say I'm long and it starts to roll over, so I sell the long and I go short. It doesn't do much, and I take a break even or stop or something. By trading the other instrument, instead, you can overlay or put 2 or 3 entries for each one slightly above where it's currently trading. So when you have that overlap area, I can explain better in the room with a live real trade example so you can see what I'm talking about. But the point is, successful trading is not as simple as some people would make it out to be. There is a degree of complexity, but it's not rocket science. It doesn't have to be too difficult, but you do have to have some street smarts and know how to put together a trading plan using price action triggers in live markets. So good stuff. Hey, Kat, what are my thoughts on gold? I haven't been trading gold lately. When I do, I trade GDX versus dust, right? That pair trade looks like this, right? GDX versus dust. Notice, please, both of those charts are crap. They're horrible charts, so I don't trade them. Why would I trade this? Why on earth would I trade this? You're fired. You're fired. When I can trade, I don't know, something that goes up instead. So, see, I like to trade things that go up. Just call me silly, but I like to make money. And I only get money in my pocket when I trade something, I buy something, and someone's willing to pay more for it. And then the cascade effect of new people are willing to pay more for it. So I let it run until the music's over. I tighten up the trailing stop, lock in a profit, and when it starts to fail and go back, I'm cash. And it will always now flip over to its opposing instrument. Let's say you're long here, and let's say you sell here right near 63. You don't get the exact top, but let's say you sell into, you tighten up a trail stop and get shaken out right near 62.90. That's fine. Okay, you're in, you're out. You make some money on that. Then you're looking for the opposite instrument on a bounce. And so say you buy here, makes a little run. Okay, let's say you try and buy bounce here, that's scratch trade. Buy another bounce, and you make some money. So you hammer away at these charts until it makes it work. And so you're looking for alternating long and short positions. Let's see what else. We're going to wrap up here in just a sec. Now, note to self, I'm going to buy TQs on a bounce. Just because I'm in the inverse instruments like TZA and SQs, I'll stop out of those as they go down pre-market. One strategy I use, by the way, is I don't sell something just because it gaps down. Like UVXY, it gapped down yesterday, but then it skyrocketed up. I never sell the gaps down unless they continue 30 cents, 40 cents under the pre-market 7 a.m. Opening range. So that's one thing. Anyway, point is, when you look at these charts, we got lots of opportunity. And so what you're looking at doing is putting together a trade plan that makes sense to serve you well as market volatility heats up. And you want to be in and out of your trades in a way that makes sense on your term. So I think that'll wrap us up. We've got a long, peaceful weekend, but we've got a long week ahead. Earnings are out. A lot of retail is still coming out with inflation the way it is, and politics and all the kind of backstory out there in the world. It's a very tough time for equities to get some love, right? With inflation, families are being squeezed for cash, and a lot of the older folks have their adult children moving back home or whatnot. And so a lot of bills for people. And so they need to chip away at their equity positions or their mutual funds or whatever, take money out of the stock market to pay for living expenses, because living expenses are so high because idiot in the White House won't let our American oil companies drill for oil and lower our gas prices. So with a radical left-wing agenda in the government, it makes it tough for inflation to come down until we can become energy independent like we were under our prior administration. So the point is that puts pressure on equities because people have to take money out of the stock market to pay for expenses. So that's another pressure that they don't talk about on the television, but it's a true one, right? People are facing these huge double-digit inflationary increases because of the price of energy and gas and all that. Just like one major food manufacturer was interviewed on CNBC, and he said that transportation and packaging, mainly transportation, is a major cost that goes into food. And so when the price of oil is high, because some people won't let our oil men and women drill and open up leases and restore a pipeline and all that kind of stuff, that artificially inflates the price of oil, which inflates price of gas, which inflates inflation or makes inflation go up. So as long as that's all in place, my point is there's a lot of bearish pressure on the market. So I would, if I were in equities, I'd be selling into the bull market rallies that may come up, maybe Monday, Tuesday. I would expect no further than Wednesday. Remember, I said this too. It's a fake out that happens with shocking regularity. What's shocking to me is that people don't recognize the dang pattern. As my colleague Steve Nissen would say, the market leaves clues. When there's a bull market rally, it lasts all of 3 days, gang. Bull market rally, 3 days. 1, 2, 3. Then it crashes. This is for idiots, okay? This is I shouldn't say idiots or morons, but hey, the selling's finally over. Now we can start buying stocks. Epic fail. No, they put on remember this? I shorted this. I went long in versus hundreds of shares on that day after market, right after market, because I knew that was a fake out, right? And I made lots of money on that. Knowing the patterns and what to look for can really help your trades. So my point is, if we get a Monday, Tuesday, Wednesday, don't be out there buying stock. I'm not going to be out there buying stocks left and right for swing trades. I'm going to say, nope, we're going to go back down again. So sell into rallies, but don't buy into rallies. Don't buy it. Don't buy it unless we get over a previous peak or say 4,100. That'd be a technical break of the downtrend. We're still in lower lows, lower highs. If we break the previous high at 4,100 in the S&P, then maybe we'll start bottom fishing things like Disney or other quality companies. But for now, we're still in a very much a bearish scenario. Yeah, Heidi's saying thank you for saying that out loud. I can't say it here in New York. Yeah. Well, I'm plain spoken. I'm honest. I'm direct, and I like to see it the truth as I see it, at least. And I hope that it helps you make sense of this dang market and hopefully do well, because there's opportunities out there. I've had my best 2 weeks in months and months this past 2 weeks, making $4,000 in 2 weeks. For me, that's a lot. That's good. I have a modest trading account. I don't have some big $800,000, $1 million trading account. I have a small 5-figure account that I trade. So if you're like me, unlike some of these people out there who claim to be making $100,000 days or something, that's a bunch of BS. I think it's much better to trade small, trade conservatively, trade intelligently, and look for the best opportunities. Y'all have been great. Thanks for being here. I appreciate it. Let us wrap up for now.